Treasurer Scott Morrison, thank you very much for racing up.
Thanks, Leigh.
You're facing an election within a year and the economy has suddenly come up roses, delivering you a windfall of about $35 billion. To paraphrase Paul Keating on Peter Costello, has your derriere had a lucky encounter with a rainbow?
These things don't happen by accident. Stronger economies don't happen by accident. You have to work hard. Businesses work hard, employees work hard to generate these sorts of outcomes, and that's what's happening in the Australian economy. We've turned around an economy as an Australian people that just several years ago was seeing investment in the negative. Now it's in the positive. Business confidence is up, conditions are up, businesses are starting. This is happening because of the settings that are in place and the hard work and enterprise of Australians, and that's what we're backing.
You say these things don't happen by accident. Actually, to the contrary, there's an enormous amount of luck and timing involved in the economic performance. The budget papers note that the global economy has risen to its fastest pace in 6 years. You're primarily benefiting from external factors, aren't you? Not through any policies you've introduced.
No, I disagree with that entirely. I mean, over the last several years, we've done everything from expanding our defence industry programs, which is creating jobs in the defence industries. We've lowered taxes for small and medium-sized businesses. We've lowered taxes for new start-up businesses. We've invested in science and technology. We have a $75 billion rolling infrastructure program. We've been investing in a growing economy, and the economy has been growing.
You cannot deny that you are benefiting from favourable external conditions.
We said at the beginning of last year that the global economy was turning, and we've put ourselves in a good place to benefit from that, Leigh. Opportunities are one thing, but opportunities pass many countries by. They're not passing Australia by because we've put ourselves in the right place to be able to capitalise on that and grow jobs. More than 1,000 jobs created every single day last year.
You like to say that you're a government that lives within its means. You're giving away about half of the $35 billion windfall to fund income tax cuts. If you live within your means, why aren't you using that to pay down debt and get back to surplus faster?
We're not giving anything away. It's their money. They earned it. They pay us tax. We don't, this isn't a spend. We're saying that when taxes rise too high, above the speed limit of 23.9%, we say we've got to give the money back. If you run taxes too high as an economy, it ends up costing them their own jobs, their own investment, their own futures.
Don't you think Australians, they don't really care about the number, whether it's 23.9 or 24.2. What they care about is the quality of the services that they get delivered.
They care about paying high taxes, and they care about paying too high taxes. And you can achieve the essential services which we've set out in this budget. Everything from 3,000 extra doctors and nurses in regional areas, guaranteeing the pharmaceutical benefit scheme, investing more in 20,000 aged care places for in-home care. This year we've announced alone. They're essential services. Now, we're doing that. We're getting the budget back into balance 1 year early. We're increasing those surpluses over the medium term to over 1% of the economy, and we're staying under the tax speed limit. Net debt is now peaked 1 year early. That means we've turned the corner on debt, and we are now paying down debt every single year to the tune of over $230 billion over the next 10 years, 30 in just the next 4.
You say net debt's turning a corner. It's double what it was when you took office. And even on the best case scenario that you're offering, it will take 10 years to drop away to 4% of GDP. Do you think that would pass most Australians' benchmark of turning a corner?
If you could reduce your mortgage by that amount, in that amount of times, over 10 years.
I wouldn't say I was turning a corner today.
Well, if you're paying the debt down, if you're seeing the debt come down from today over the next 10 years by $230 billion, that's what's happening over the next 10 years, Leigh. And you know why it's happening? Because we've got the budget into balance in 1920. That's what it's forecast to achieve. Once you do that, you can start paying down debt. This is the moment we've been working towards for years to get to the turning point on debt.
And that's still in the future, as you point out.
No, it's now. No, I'm sorry. 2017-18, net debt peaks this year, and net debt falls as a share of the economy from this year down to 3.8% of the economy over the next 10 years. So we turn it this year.
Australia has now had 10 years of deficits. Your party is responsible for half of that. National debt has doubled since you've been in office. How is that not a failure based on what you said before you were elected?
You don't turn the ship around easily. When the Labor Party set off on a spending binge and blew the surplus and blew the expenditure from the previous coalition government, from day one, we've set about turning this ship around. It hasn't been an easy task, even since the last election. $41 billion in legislated savings have been achieved through the Senate, which others said could not be achieved. So we are getting the job done, and this is something that we've been working to for years, and that means the essential services that rely on a stronger economy can be guaranteed by the Turnbull government.
You say Labor was on a spending binge. Your spending as a percentage of GDP is roughly the same as what theirs was. It's barely moved. But let's compare the
Well, hang on a tick. No, Leigh, I've got to pull you up there.
It's barely
because our real growth in expenditure under this government, since we came into government, is 1.9%. Over the budget and forwards, it's 1.6%. Under Labor, it was 4%.
Okay, well,
so we have the lowest spending growth of any government in the last 50 years.
I don't want to get bogged down on spending as a percentage of GDP, because your
that's going to 24.7% over the forwards.
Which is basic. Labor's was around 25%.
Well, 0.3% of GDP, Leigh, is a pretty serious deal.
Well,
and it'll be below the long-run average, which is at 24.8. So spending under control, taxes under control, debt turning around, getting back into balance 1 year early and turning that debt ship around is a big deal.
You say spending's under control. Let's compare the Turnbull Morrison government to the Howard Costello government, for example. By the end of their first year in office, they had their spending equal to, and then after that, smaller than their receipts. From year one, your spending has exceeded your receipts. You've had 5 budgets and you've never been able to square the ledger.
And in 2019-20, that's when we're estimated to return to balance, Leigh.
But do you agree that past behaviour is the best
Well, I'll swap our Senate for theirs any day of the week, Leigh. But that said, these conditions in these times are different. As that government went through their period, their expenditure growth was at 3.3% real above inflation. Ours is 1.9% above inflation. So on that measure, our expenditure growth has been the lowest of any government in the last 50 years. And our tax to GDP is also lower because we've set a clear speed limit on taxes, 23.9%, and that is a hard limit. It's in our fiscal rules because if you control your taxes, you control your spending. You shouldn't give any government a blank cheque on taxes, and we refuse to take one, and no one should offer any such measure to any other government.
Your signature policy in this budget is your income tax cuts. Is that an attempt to buy swinging voters? No,
it's an attempt to reward working Australians who've been doing it tough, who've seen the economy improving, but they're yet to feel it. And this tax relief means filling up your car 6 times. It means a quarter's electricity bills. It means your school uniforms and books for your kids to go to school. It means a new washing machine. It was reported in one of the papers today. It means your car rego. It means getting to work from Western Sydney to the CBD on a train for about 2 or 3 months, depending on how you do it.
Well, it's about $10 a week, actually, so it's not going to be all those things.
Hang on. No, it is. It is each of those things, Leigh. 530.
It's not going to be all of those things.
I said it is each of those things, and each of those things is important, and that's how it makes that thing just a little bit easier for those families. $530 on a family, and if it's a double income family earning average incomes, that's $1,000 a year extra for those families in less tax that they have to pay. It's their money. I want them to keep it. They earned it.
By cutting income tax, are you, while we're still in the budget's still in deficit, are you rewarding today's workers at the expense of future workers who are going to be paying down debt for longer?
No, but over the 10 years, net debt, as I just said, gets to 3.8% of GDP and it falls by over $230 billion. I'm sorry?
You can't make 10-year projections. The budget is based on forward estimates of 4 years.
And okay, 10 years let's just talk about the forward estimates. It comes down by $30 billion over the next 4 years. $30 billion reduction in net debt in the next 4 years alone.
And that still puts debt at over
in this budget. And then it falls over the medium term. As Peter Costello said on your program just last night, it takes a good decade of being in surplus to turn these things around. And that's what we're planning for. And you can't achieve that, as he knows, without a stronger economy, because that's what that coalition government was able to provide for, and that's what this coalition government is providing for, a stronger economy.
He actually said last night that he doesn't think national debt will be paid down in our lifetimes.
Well, he hadn't seen my budget yet.
Well, why would Australia believe you, who hasn't delivered a budget surplus, over a treasurer who delivered 10?
Well, I just said he hadn't seen my budget last night.
Well, he would have a fair idea of what the parameters of it were likely to be.
No.
Why do you say that?
Because he hadn't seen the budget.
What, are you saying Peter Costello's not a figure of credibility as a former treasurer?
No, I'm saying he just hadn't seen the budget.
You've mentioned,
it's just a statement of fact.
You've mentioned the size of the surplus and the pace at which you're going to pay down debt, but given that our nation is very vulnerable to external shock, for example, commodity prices, how is a tiny surplus down the never going to protect Australia against sudden volatility in commodity prices, for example?
Well, this is why you don't have higher taxes, because the higher taxes weaken your economy. It actually slows your growth. It costs jobs. It makes you less resilient. This is why we need to control taxes. And we're controlling taxes and getting the surplus projected to a balance of over 1% of GDP over the medium term, which has been clearly set out in our fiscal rules. If you tax the economy harder and higher, which is what our opponents want to do, then Australia will pay a heavy price. It'll be less resilient. It will be in less of a position to deal with these things because it'll have a weaker economy. The stronger economy is the key, and you can't harm it. And having lower taxes helps that economy be stronger.
Governments can't control, though, what people do with the money in their pockets. You can't control if they save it, you can't control if they spend it, and you can't control what they spend it on. Aren't you foregoing a known amount of revenue in the form of income tax for an unknown effect on the economy?
Leigh, it's their money. It's not a giveaway. It's theirs.
But
I trust Australians to look after their own money and spend it on what they think is most important to them. Now, others may want the government to make those decisions for them, but I don't think those Australians do. I think that, and I know you're not suggesting this, but it's an offensive idea that you should give your money to the government because they know best. There is a reasonable amount of taxation that should be in the economy. We've set what our number is. It should be no higher than 23.9%. It's based on the post-GST, pre-GFC period that occurred under the Howard government. That is a sensible level of taxation to support a growing economy. We don't think you should breach that speed limit. If you go too fast, you crash the car on tax.
But you're saying it'll strengthen the economy.
Yes.
But what about, for example, if people decide to put that on their mortgages, that means they're consuming less, so therefore you say your GST receipts...
And they're reducing their level of debt over time. Now, you're just extolling to me the great virtues of this, and I agree with you.
You're saying that it will strengthen the economy, that it will stimulate the economy.
Well, we do know for those particularly, Leigh, on incomes of between 37 and 87,000, and those on middle and lower incomes, that their marginal propensity to consume is almost 100%. And that's why this measure, as the first stage of the personal tax plan, focuses on those households because A, it does support consumption, we do know that. They aren't in the position to go and do some of the things you're talking about. They will spend it on the kids' uniforms, they will spend it on the bus ticket, they will spend it on these things. That's what they do. I spend a lot of time talking to everyday Australians, and particularly incomes of what we're talking about here.
Well, a lot of people are under mortgage stress, they might bank it.
They have a lot of pressure they need to deal with. And paying for those things, whether it's your quarterly electricity bill or for a dual income family, it's a half year's electricity bill. Now that's important. That's important relief. They need it now. We're giving it to them.
Treasury, we spoke about the size of the surplus. Treasury's modelled just a 10% shift in commodity prices, and we know how volatile they can be. If there was a 10% shift, that would be worth $6 billion to the budget bottom line. There goes your surplus. Are you really making your policy decisions taking into account the sort of volatility that's out there in the global economy?
Yes, we are, and on commodity prices in particular. In every single budget update and statement I've delivered since December of 2015, our commodity prices estimates have proved to be cautious. They are on the soft side of the line, and on every budget statement I brought forward, we've seen improvements because we've taken a cautious approach. Now, the previous government didn't do that. They overpitched on review every time, and the surplus projected date just blew out year after year after year. 6 consecutive budget updates, all with a projected balance in 2021, and indeed in this one, the balance coming forward a year. We've been able to do that because our forecasts are credible. We're the only one of 10 countries to retain the AAA credit rating at a time of extreme financial pressure in this country. One of the reasons for that is we don't over-reg our budget.
Scott Morrison, we always appreciate the Treasurer racing up. Thank you very much.
Good on you, Leigh. Thanks to be here.